think that the rebound in the American economy is already over?
Well, I think the rebound is slowing down.
You don't think the market will retest the March low?
No, I do think it's doing a little bit too okay, given the uncertainty that you mentioned, which is very real.
You know, the liquidity support will not be indefinite.
No, I think the liquidity support is indefinite right now.
The United States choose a Sisyphean way.
You know, it's a little bit like if you've got a leaky tire, if the tire in your car has got a leak and you keep on pumping air into it.
You don't worry anything like deglobalization?
I don't think that in the long run this will kill globalization. Actually, I think it may accelerate globalization.
Thank you, David, for your time to join Top Investors Talks. First of all, we see the relentless rise in the infected numbers of COVID-19 in the United States. Do you see any possibility of the full-scale re-lockdown in the United States, at least in some worst-hit states?
No, I don't think we'll go to a full lockdown, but I think there are things that will need to be done. I think you'll see a lot more people wearing masks. I think it'll be difficult for a lot of restaurants to open. So I think the reopening of the U.S. economy will stall out. But I think I don't think we'll go back to the lockdown that we had, such as we had back in April.
JP Morgan Asset Management predict that the recession now is the most severe since the Great Depression. But you also mentioned that it is probably the most short one. You owe only the first half of this year. So given the huge uncertainty in the pandemic situation in the United States, are you still confident about that?
Yes, I am. I mean, remember the word recession in economics means that GDP is falling. And we believe that GDP fell very strongly from February to April and then started to rise again. And so, yes, this was essentially a 3-month recession. That's what it was. But we're very far down. It'll take a long time to build back up. So we believe that by the end of 2021, by the fourth quarter of 2021, we will have returned to the GDP that we had in the fourth quarter of 2019. So it'll take that amount of time to recover. But we do think that the recession's over. The recovery has started, but it's going to be a long convalescence. It's like if you have an illness, you know, after 2 days, you may be past the worst of it, but it may take weeks for you to feel really healthy again. And that's kind of where the U.S. economy is.
Do you think that the rebound in the American economy is already over or fading, something like that?
Well, I think the rebound is slowing down, but it's very hard to actually get a double dip recession in an economy. It's very hard to get GDP to go down and bounce back up and then go down again. And of course, we also have a lot of fiscal stimulus. I think there's another stimulus bill that's going to be signed into law probably in early August. I think that will help support the economy. So I think it'll be much slower growth, but I don't expect another recession, sort of a double dip in terms of GDP growth.
So you are very optimistic that the new round of stimulus will be approved next month?
Yes, I think it probably will. I think that there are differences of opinion among the administration, because if this bill is not passed, there's going to be a lot of hardship over the winter from people who are unemployed, who don't have enough unemployment benefits, or from small businesses who've got no way of moving forward, or from state and local governments who will have to lay off workers. So it's really essential that a bill get passed. Nobody wants to get blamed for not passing.
The United States, the underlying disease is the virus. And the correct treatment is to control the virus. But money cannot control the virus. Some people say the United States choose a costly but futile, Sisyphean way to do that. Do you agree?
Yes, I do really. I think that, you know, it's a little bit like if you've got a leaky tire, if the tire in your car has got a leak and you keep on pumping air into it, I mean, eventually you've got to fix the leak, because it's like pumping air into a leaky tire. And so I think that is the problem.
But there is money. That is not air. Air is free, right?
Well, that's right. It is, but we live in a strange time, because with interest rates so low, the Federal Reserve is willing to print money, to lend money to the government. Interest rates remain very low. There is no real inflation. So it is adding to the U.S. national debt, and over time that will have to be paid back. So it is wasteful. I do think that over time the United States will pay that money back. But in the meantime, you're right, this is not the most efficient way to deal with the problem. The most efficient way is for the United States to have a united policy with how to deal with the virus, and for everybody to be on exactly the same page with trying to crush the virus. And if we do that, then it will be less expensive to get back to normality.
How far the Fed will go? You know, the liquidity support will not be indefinite.
I think the liquidity support is indefinite right now. I think the Federal Reserve is very dovish. If you listen to the members of the Federal Reserve, they believe that they can safely put stimulus into the economy until they see inflation. And in fact, I think they are moving more and more towards what we call average inflation targeting. So if until the inflation rate goes above 2%, I think they will be willing to put more liquidity in. But I think the Federal Reserve will continue to do that until the economy is well into recovery and really until the pandemic has subsided.
Do you have any worry about the cost, the accuracy, and the side effect?
I do worry about the cost of it because it's just like in your personal finances. If you borrow a whole pile of money today, if you live beyond your means today, you're going to have to live beneath your means in the future. And eventually taxes will have to go up in the United States to pay this back. I worry about its ineffectiveness. It's not what you really need to do is help support workers who can't find a job while the pandemic is raging because they're in the wrong industries. They're in the hotel industry, the travel industry. The jobs aren't there. You've got to support small businesses. People have worked on businesses for generations, and then the business runs out of money. You've got to keep equity in those businesses, help those business owners until they can reopen properly. So these are the things you should do, but instead I think we're putting a lot of money into trying to stimulate consumer spending, but that's not really the problem. The problem is those industries that are affected by the pandemic. So what you need to do is support those businesses and those workers and crush the pandemic. And that's a smaller job than the amount of stimulus that's being put into the economy right now.
As you said, we are going to be in a world of high debt and low interest rates for a very, very long time. What does that mean to the investors' strategy and where to park the money?
Well, I think investors need to be careful here because you're right. That's where we are right now. But you can only push this so far. Eventually, the danger is that if they want to sell assets, get hold of their money, use their money to buy goods and services, there's so much wealth that is not being used to buy goods and services that if people suddenly start to buy stuff, you could end up with inflation. If you have inflation, then long-term interest rates go up and it becomes much more difficult for all governments to finance their debt. So it is a dangerous position we're in. For investors, I think valuations are really important. Buy stuff that is not too expensive. And I think there are a lot of stocks, stocks in Europe, stocks in Japan. I think some value stocks in the United States look good. I think real estate in many places looks like a reasonable investment. So there are good investments, but make sure that they all make sense in terms of value, not just momentum. I see a lot of people doing momentum investing. I think that's a very dangerous game in uncertain times.
Given the numbers of virus is rising, but the markets in the United States are surprisingly relaxed. Do you see any risks of correction?
Well, I think there are some risks of the correction because the market has been perhaps a little too resilient. But remember that stocks, when you buy stocks, they are a very long-term investment. The value of a stock depends on money a company will earn for years and years and decades into the future. So if this is a 2-year experience, if this is, 2020 is the year of the virus, 2021 is the year of the vaccine, and then we're done, and companies can get back to normal, then I think most of the value of the stock market should be retained. And also, I think that if you look at the industries that are really important for the U.S. stock market, technology, healthcare, financials, these industries are not being hurt that badly. The industries that are being hurt badly, restaurants and travel industry and so forth, they're not big players in the stock market. So when you look at it from that perspective, it's not surprising that the stock market is doing okay here. I do think it's doing a little bit too okay, given given the uncertainty that you mentioned, and which is very real.
You don't think the market will retest the March low at the second half?
No, I don't think it'll retest the March low because I think a lot of people will put money into it as it goes down. But I think it could see another correction. It does, in March it was down 34% from peak to trough, and I don't expect that. But I think we could see another 15% or 20% drop at the most. So it is, a sizable correction is quite possible. if the economy seemed to be really slowing down towards the end of the year.
Is it correct that the markets of the area where the virus control is good can outperform the others?
Because I think that in 2021, I think the world will clear up this virus, but I think it will be cleared up and snuffed out in East Asia almost immediately there's a vaccine. I think it will be in the first half of 2021 in Europe. But I think in the United States, it may take the second half of 2021, and of course in Latin America, maybe even later. But I don't think it makes that much difference in the long run, because I think ultimately we will produce enough vaccine in the world in 2021 to get rid of the virus. So I still want to look at companies that will do well and countries that will do well in a post-vaccine world.
Even the pandemic is over, what can be permanently changed?
Well, I think there are some bad things and some good things. I mean, I think we will always be scared of another pandemic, and I think it has isolated some people. It may have made the gap between the rich and the poor a little bit worse. But I think after this, we will all have a greater respect for science, and also I think there will be an interest in world health, because once one of the interesting things, it's almost it seems strange that we have been visited by this virus, because in order to crush COVID-19, we're going to have to crush it throughout the world. There's going to have to be a global vaccination program, because we know that the immunity that people get from a vaccine may not last that long. Even though the cure right now is social distancing, I think in the long run it may actually bring the world a little bit more together, and we'll have more, we'll put more importance in each other's welfare and health.
You don't worry anything like deglobalization or maybe globalization or the supply chain?
No, so there are two different issues here. So first of all, on the supply chain issue, some people have said we didn't have masks, we didn't have ventilators, we didn't have the right chemicals, we should make them all at home. But if you think about it, you will never be in a position where you have exactly what the ability to ramp up manufacturing immediately you have a crisis. What you will need in that case is a stockpile. So just like we have a strategic oil reserve, strategic mask reserve, and so forth. But when you have those, so long as you can stockpile, you can deal with the problem when it occurs. That's not about manufacturing it domestically. It's about planning. And so you can still manufacture from around the world. And so I think there will still be that need to buy stuff from around the world. And I think right now there has been a lot of nationalism around the world in recent years. I think the world has drifted apart. I think this experience, this common global experience, may actually turn the tide back. And I hope it leads to an appreciation of the importance of global welfare, of everybody doing better. And so actually, I don't think that in the long run this will kill globalization. Actually, I think it may accelerate globalization.